Good afternoon, everybody. Going to go over our Forex trades for today, Tuesday, January 19th. Hope everybody had a nice long weekend with Martin Luther King Day. We did have 7 trades. It's involving a few days. We took Friday off and then Monday off. But we did get liquidated. Our positions got liquidated during some of those days and last night as well. So we had 7 trades pulled out 28.6 pips on a size adjusted basis. On non-size adjusted basis, 187.2 pips. So we'll take it. Let's just talk about the economy. Not much news tonight. Or this morning, I should say. There's a Fed meeting next week, the end of January. You're looking at it right now. The Fed fund futures are 0% chance that they raise, and there's actually a 6% chance that they cut rates, which is absolutely amazing. So the market is telling the Fed that they made a mistake. It may not be saying they made a massive mistake, but they're saying they made a mistake. 0% chance that they raise rates next week. 6% that they reverse course and they cut rates. Absolutely incredible. NASA Association of Home Builder confidence number came out. That missed. That's another miss, which has been compounding in the housing sector. We've been bearish on housing for quite some time, and it's all coming to fruition, and we're witnessing it right in front of our eyes. What else was it? Last night, China released a GDP number. They grew at 6.8%. It's the slowest pace since 1999. So you're looking at 16, 17 years worth. It's the slowest pace they grew. Absolutely amazing. There was something else I wanted to talk about here. Oh, the housing. The U.S. government is amazing. Like, it's almost like the politicians don't know what they're doing. So they see the economy slowing, right? They see the economy. Obviously, we had the financial crisis. The economy tried to come back. It stabilized, came back a little bit. Housing came back some. It's definitely taking a turn over the past year. And we've been saying this over and over, right? So we've been hammering it home. So for some reason, the politicians just don't understand, or they don't want to admit, or whatever. But it becomes worse because they just created a new law, which was announced last week. They've decided to crack down on cash buying, full cash buying of houses, if it's from an anonymous. So meaning if it's not from an individual person. If it's from an LLC or an offshore company or whatever, the United States government now wants to know who is behind that company or the LLC or whatever, and they want to know who's behind it, and that way they can track it. They're saying it's to cut down on money laundering. And look, we all know it's been happening. We all know the Chinese and others around the world, but let's just stick with the Chinese. We all know that they've been trying to get their money out of their country over since the financial crisis happened, and the Chinese economy continued to do well. The people that were making a lot of money, they tried to get their money out of their country because, hey, it's a communist country. And how are they doing it? They're sneaking it out, whether it's legal money or whatever. And some of it's legal and some of it is illegal, let's face facts. And they're laundering it by buying in the major cities, New York, Miami, LA, they're buying houses, apartments, whatever, with cash. And if they ever flip it, they just laundered their money, right? So the United States government now wants to make it illegal, or they've announced last week it is illegal. Over a certain threshold, I believe it's $3 million. I'm not 100% sure on that number. But any apartment, house, whatever, over $3 million is not allowed to be sold to an anonymous. That is going to hurt the housing market. Let's just face facts, right? It's going to hurt the housing market. Those guys, those people, men and women, if they're doing it for their reason, right? And they don't want to not do it. And if the government doesn't allow them to do it, they're going to find some other way to launder the money. Or if they're doing it with legal money, they're going to say, well, screw you. I'm not buying in America because I want to buy with cash. You're not going to allow me. They'll go buy somewhere else. Maybe they go to Paris or whoever. I don't know. But they're not going to go to the United States. So it's absolutely amazing. My point is that it seems like the politicians, they either don't want to admit it or they really don't understand what's going on. You know, that's going to pull, like, it's going to pull almost like the last carpet out from underneath the real estate market. And you watch, it's only going to hurt things. And if you hurt the high end people, the low end people eventually get hurt as well. So that was just something I wanted to bring up. I don't think there was really any other economic news that came out Friday, last week when we were off, or even yesterday when markets were closed here in the States. Just kind of breezing through my stuff here. Yeah, I don't see nothing. So let's get into. Oh, excuse me. There was one other thing. Johnson & Johnson announced layoffs. So here, I don't know if we mentioned it because I don't remember when the news came out, but Walmart last week is closing, I think it's 268 stores and laying off 14,000 people. I think the number was. Here, Johnson & Johnson announced today they're laying off several thousand people. But, the president and many politicians on the Democrat side, not to choose the Democrats, but let's just stick with, because he's in the White House, and the Fed for that matter, are telling us the economy is so good and so strong. But yet, Walmart's laying people off, Johnson & Johnson's laying people off, and numerous other companies in the past year. Okay, so let's get to our trades, because there were a lot. So the first one you're looking at here, we had only 10% of Euro Swiss franc, which we were long at 1.09269. We were looking to buy more on the way down. Unfortunately, we didn't get it. We did miss on this spike up. So when it came back, we were like breaking even, and then all of a sudden it started to come back. We figured this 1.09500 level is going to be some resistance, and so far it's proven. Yes, it's popped through it several times up into the 60s, but we're going to get out ahead of that. So we got out 1.09440, picking up 13.1 pips or 1.3 on a size adjusted basis. Next you're going to see is pound dollar. This was correlated with pound yen. Okay, we were trading the pound yen was the pair that was giving us the signal, but we correlated it with pound dollar to reduce our directional risk. So let's go over pound dollar first. We were long this 1.44073. Basically at the same time, we were short pound yen at 169.440. We ended up selling pound dollar at 1.43384. We're losing 68.9 pips. Adjusted for size, we had 30% of this. We lost 20.7 pips. But you'll see here on the pound yen, we covered this 167.346, picking up 209.4 pips or 41.8 pips, as we had 20% of our normal size. We have to have smaller size in pound yen than pound dollar because pound yen is more volatile. So we don't want to be even 1-to-1. Next one was pound dollar. We were long, again, basing it off pound yen was giving us the signal. Pound dollar, we were long 1.42564. We sold 1.42396, losing 16.8 pips or 5.1. Again, 30% of our normal size. At the same time, we were short pound dollar 167.486, and we covered 167.042, right ahead of the figure. Not only the figure, but there's a support line. You can see these lows here as it came into that last night. So we picked up 44.4 pips or 8.9 as we had 20% of our normal size. And then the last was Aussie dollar, and it was correlated with Aussie yen. Again, trading off the Aussie yen. We had 40% of both of these. They're a little closer in volatility, although Aussie yen is a little bit more volatile than Aussie dollar. Not as drastic as these two over here, pound dollar and pound yen. So Aussie dollar, we were long 0.69646. We ended up losing 1.6 there, covering it. Sold at 0.69630, losing 1.6 pips, size adjusted 0.6, as we had 40% of our normal size. And then Aussie dollar, we were short 82.182. We covered 82.106 for 7.6 pips. Size adjusted 3.0. So in the end, 28.6 pips on a size adjusted. On a non-size adjusted is 187.2 pips. So we'll take it for sure. Pretty solid. Couple of days. Granted, it is a couple of days of trading. So if we were in the office all those days, it would have been broken up, obviously. So, but we'll take it and we'll move on. So if there's any signals coming out, they'll be coming your way. If you're still trading now, good luck. And assuming we get some action tonight, tomorrow morning, we'll be back tomorrow. Have a great rest of your day.